Hello and welcome to WhatKeepsYouAwake.tv. I'm your host, David Hooser, and I'm thrilled to have our next guest, a longtime colleague and equally longtime friend, Mr. Mark Schwartz.
Thanks for inviting me, Dave.
You're welcome. Mark is a recovering attorney turned 4+ decade accounting professional. While his political positions are a bit confusing to me, his numbers are right on the target. With 10 years of service and a lot of interesting conversations along the way, I could not be more proud to welcome Mark to the show. So Mark, let's get started with our foundational questions. So what keeps you up late at night?
Well, as a tax professional, one of the most daunting things we can realize is the tax code changes daily.
Oh,
And for that reason...
just a few pages though, right?
The tax code has 9,999 sections.
But who's counting, right?
But who's counting? And they change all the time because Congress changes little bits and snips of every part of the code at any given time. And what keeps me up at night is I'm looking at my phone and I get another alert from the AICPA or the IRS telling me the tax code's changed. Well, what a surprise.
And those aren't butt dials. Those are like
those
things you have to pay attention to.
I have to pay attention to the thousands of pages I have to read.
Gotcha. All right. Well, that would keep me up. That would actually create significant nightmares for me if I had to wonder about that all night long. So, all right, why sign up for all these sleepless nights if you've known that's coming? You've been doing this for 4 decades.
That's an interesting question. My uncle, my mother's brother, was a CPA. My cousin was a CPA. My other cousin was a CPA. The family is either doctors or CPAs. And so
some interesting holiday parties at your place, huh?
Very interesting parties. It's like having doctors, only instead of saying, gee, my back hurts, they say my wallet hurts.
That's true.
So I became an accountant, but I made a mistake along the way. And you mentioned the law. Well, when I took my tax law course, I took it at the law school, which was part of the university. And my law professor said, you're going to law school because your talents are wasted as just a CPA. So I went to law school and I served as his intern when he worked at Arthur Young, which was one of the big 8 firms when there were 8 international CPA firms. But I was shaving one night and I was looking in the mirror and saying, I'm going to have to do this for the next 40 years. I can't look in the mirror as a lawyer. So I decided to go the CPA route.
All right. Well, good. Well, we're obviously you've been working with me for a long time in the various paths and journeys that we've taken in our both for and not for profit sides. So I'm glad you made the choice you made. So,
well, it's been my pleasure as well. I can't say I've had it all easy, but it's always been a pleasurable experience.
Wow, good. I'm glad to hear that. Although I'm sure once we get back to the texting mode on Teams, the political positions will pop up again and again. So that confusion will continue.
Well, the confusion happens as a direct result of my looking at life in political terms because politics rules the tax code.
That's a good point. And so with that, let's talk about some of the things that our audience should be thinking about every day. We're, in front of what I would call risk-on audience. They are entrepreneurs. They like to, you know, they have an idea, they like to jump on that idea, try to make a market of it, or try to jump into the market that's being established. Sometimes we get so excited about the idea, we forget about the foundations, the functional, the structural pieces that have to come together to make sure this idea that we have becomes a going concern, a thriving business. So let's talk about, things like just managing daily cash flow. I mean, how do you do that? What kind of systems need to be in place to keep an eye on not just your checking account, seeing a check deposited, a check written, but what kind of cash flow systems should our audience be considering?
Well, that's probably the number one question, and the reason any entrepreneur is kept up at night. And what you have to know is not what is in the bank account, but what is about to come into it and what is about to go out of it, what we call the pipeline. And the pipeline is, in practical terms, accounts payable and account receivable. And sometimes accounts receivable are not just what you've already sold, but what you're doing to feed the pipeline for the future. If you don't have a steady supply of leads or a way of generating new business, you're not going to make it. And if you don't take care of your existing clients, they're not going to come back.
So being able to manage cash flow is not just looking at at a journal uh, of deposits and expenditures. You're actually talking about tying your functional cash flow system into a planning, a forecasting system.
Absolutely.
Okay.
And the good entrepreneur isn't necessarily an accountant, but he is keeping an eye both on the bottom line and more importantly on that all important pipeline.
So, but when we talk about accounting systems, I mean, I am obviously familiar with many, but we use as a regular tool QuickBooks. So, using a QuickBooks type tool, do those kind of tools link into a CRM, system or tool?
That is an important consideration. There are different what we call general ledger software packages, QuickBooks
Being
being the
one.
most common one used. Many have interfaces, some require some manipulation, and we happen to have an excellent IT professional who's helped us create that interaction. But the software package for accounting isn't as important as looking at both segments separately and making sure that the integration works. So constantly testing is important and constantly looking is important. It's not what you expect, but what you inspect.
Okay. So good cash flow monitoring system, solution, whatever that is. And that would also include some type of integration into a sales forecasting system and maybe also triggering invoicing from because one of the key things to cash flow is making sure you get paid, and making sure you get paid you have to make sure you let people know they owe you the money because you're dealing with companies that are also busy like you are, so you've got to tie that together, right?
The best way to do that is using a POSO system. PO stands for purchase orders, SO stands for sales orders.
Okay.
And when a customer calls or sends an email or somehow says, we need something, whether it's a product or a service, they send you a PO. And then your sales staff will turn that into a sales order. And then what we both have to do, both the client and us, is make sure that the numbers align. We sell the right quantity and at the right price.
Okay.
And then when the order is fulfilled, it turns into an invoice. And then depending on your relationship with that client, it's either due on receipt of invoice or due in 30 days, or there's some discount if you prepay. But that's
Gotcha.
how the system works.
And you load your systems too. So that's on the incoming side.
That's right.
And then you have some kind of expense management tool for the outgoing expense.
Absolutely. And it's exactly the same thing. The POSO system, only now you send the PO, the vendor to you sends you an SO, and when you get the invoice, it should match your purchase order. If it doesn't, you have a problem.
Okay. So those things need to tie together to give you the real look at the cash flow for your business.
That's right. Later on, we'll talk about how you have a separation of duties so that the person who is recording the purchase orders and recording the sales orders is not handling money, because otherwise when you pay the bill, it doesn't get paid. And when you receive the payment, it doesn't get deposited.
Gotcha.
But that comes later on when we talk about making sure there's no fraud and there's no loss of internal controls.
So that's a lot of work. We're talking some companies that are starting up brand new with 1, 2, 5 employees versus, much larger companies where they have more resources. How do you manage that? What are your thoughts on these smaller business entrepreneurs and how they manage it? Should they outsource this, function, or should they?
Absolutely a key question. The smaller you are, the more challenges you face in terms of controls. If it's just husband and wife and they get into a fight, maybe whichever is the troubled spouse won't pay a bill or won't record the deposit. So you have to have some protections. But where an outsourced professional comes in handy is watching over it and freeing up the entrepreneur to do what they're expert out in their industry.
Right.
So if they're a plumber, they should be concentrating on the plumbing business. Are they doing a good job for their clients? Are they training their staff and supervising them appropriately? One of the mistakes that most entrepreneurs make is, oh, I have to keep track of the finances. I better handle the accounting myself.
Right.
If you handle the accounting yourself, then you should come work for me as an accountant, because that's the business you're in.
Right. Okay. So you're saying, by all means, surround yourself with a team. And if they're not, employees that you're directly hiring, you should look at, services contractors that bring that skill set to your enterprise without having a W-2 type relationship with them.
Absolutely. Now, if you're really small and your budget is tight, you won't want your CPA at $150 to $250 an hour to do data entry.
Right.
Then you start looking at hiring a bookkeeper, either independently, as you described, or as a W-2 employee. And it can be either or both. And I would suggest you use your CPA to screen candidates before you hire one.
Yeah, I mean, that's the challenge, is that now we're talking about the money in your business. How much, do you trust a third party individual versus yourself to manage that money?
Accuracy and honesty are the two hallmarks of a true accounting professional. A bookkeeper doesn't have the licensing in place that holds their feet to the fire.
Okay.
Whereas if I do something wrong, I can lose my CPA card. I can be hauled before the board. I can go to jail. I can be fined thousands and thousands of dollars besides restoring the money that I mishandled.
Gotcha.
But a bookkeeper doesn't have those standards.
But they're usually affordable, a lot more affordable for daily tasks that need to be implemented.
$15 to $20 an hour to start, as opposed to $150 to $250 an hour.
All right. Anything else that let's go back to discussions on reporting and monitoring. What are some of the standard reports that a business, owner operator in that 10 to 25 or 50 employee range of what kind of reports should they implement on a daily, weekly, monthly, quarterly basis?
Well, first of all, it has to be regular and dependable. So you mentioned daily, weekly, monthly, quarterly, annual reports. They can be different or they can be similar depending on the amount of volume. The challenge is that some information comes in after the fact,
Right.
and will adjust the numbers. On a daily basis, what came in and what went out of the bank account does anything look amiss?
Gotcha.
You got to make sure of that on a daily basis. How much is in the bank? How much is pending? That's important on a daily basis. Accounts receivable and payable, they should be monitored at least on a weekly basis in terms of aging. Are any receivables taking too long to turn over? Are we paying our bills on time, or are we angering our vendors so they don't want to extend discounts or give us the service we depend on?
And you have to count on your suppliers, your vendors, oftentimes. In the
Absolutely.
startup phase.
Vendor relations are critical. Then on a monthly basis, you need a P&L, a P&L, profit and loss statement, also called an income statement. Should be every single month. It should show 3 parts: revenues, cost of goods sold, and operating expenses, what we also call below the line or overhead. And there are 2 kinds of financial statements: accrual basis and cash basis. And the difference is cash basis tells you what you've seen go in or go out of the bank account, but it's not nearly as accurate as accrual, which also shows that all-important pipeline, accounts receivable and payable.
What's coming in and what might be already in your payable system. So
That's right.
Okay.
And the other critical report is the balance sheet.
All right.
And the balance sheet also has 3 parts. It has assets on one side, and then it has liabilities and owner's equity, also known as shareholders or partners' equity. And that is critically important because that gives you the pipeline, and it also tells you what your business is worth.
All right. That is another episode we talked about in valuing your business for strategic purposes or transitional purposes. And so
Certainly.
Right. So that sounds good. So that kind of covers the basics. I want to have you back on another discussion to talk a little bit of maybe more advanced systems for small business operations and considerations. So while I've got you here, I usually ask the clients as we close out an episode, what are the kind of words of wisdom or nuggets that you might leave for our audience today before we end the discussion?
My favorite phrase as an accountant, I mentioned it earlier, it's not what you expect, but what you inspect. To put those in simpler terms, not so highfalutin, if you ask an employee, can you handle it? Yep. Great. Let me see what you're going to do. Did you do it? Yep. Good. Show me what you did. If you just take someone at their words, including yourself, the mistake is you miss something. You make a mistake or somebody does something they shouldn't have done. And so it's not what you expect should happen. You have to prepare for the worst. And that leads me to the second word of wisdom, which is what you need to plan with more than anything else is expecting the worst case scenarios. It's not that's what you hope for. It's because you plan with the worst case scenario so that if it happens, you're prepared. And if it doesn't happen, you're all the better off. So that leads to the other important catchphrase, which is those who fail to plan to fail.
Gotcha. All right. With that, we'll end this episode of What Keeps You Awake.tv. For all you in the audience, please remember to like, follow, or subscribe to the podcast. We'll see you on an upcoming episode.